Hey guys, Stock Sniper Mike here, and I'm back again with a 2-minute drill. Here to give you guys 2 minutes of one crazy week of trading. What a week of trading! The market was all over the place. Finally, after having the huge run it did the past 2 weeks, it had to cool down. The market started the week with a rally. The Dow crossed the 27,000 point, crossing a spot it hasn't crossed since March 4th, when this coronavirus sell-off first started, as well as the SPY getting over 310, a spot that it dropped below to start this coronavirus sell-off. But things had to cool down, as Monday marked the 7th straight green day for the Dow Jones in the market. And then we had a sell-off to end the week, as the Dow dropped 2,500 points in the last 3 days, from that 27,500 point all the way down to 25,050, holding 25,000 for the last 2 days. Thursday was the worst of it all, as the Dow gapped down 3% and continued to drop, hitting 7% negative at one point in the day and eventually bouncing, but closing at a low spot of 6.4%, having the worst day since the big sell-off started from the coronavirus back on March 4th. Things were getting ugly in the overall market, but in Sniperville, we kept it consistent. We went for our 20th, yes, I'm saying it correctly, 20th straight green week in the market since this whole coronavirus started. We have been able to profit every single week, 20 straight weeks, and we continued it up this week. But this week is a unique one, and it's one that I want all of you to pay close attention to because it shows how our strategy works. We ended up going 3 for 7 on our trades. That's about 42% win ratio. And we still ended up positive $2,000 plus. 2,161.52 to be exact. How do you win and come up with more money and profit when your winning ratio is below 50%? And that's because we know how to cut losses, and our strategy consists of a great risk to reward ratio before entering any trade. Instead of talking about it more, let me show you how. Now let's dive in. On Monday morning, it started early. And when I say early, I mean before the coffee early, before the actual 9:30 bell early. To close out the day on Friday, we decided to buy listed NASDAQ stock, WLL. This is a petroleum oil related stock that was creating first green day at the end of Friday. Now note that this is a first green day pattern. Now this first green day wasn't just something that was huge and just up 20% or more. There was more to it. Number one, it had a great risk to reward ratio. We based all of our trades off how much we're gonna risk. And in this stock, it created nice $1.25 support for us to risk off of at the end of the day. I also like the fact that the Dow Jones was going crazy. The overall market was getting hyped up with the world reopening. And with the world reopening, that means more people are driving cars, planes are going out, and gas and oil is finally being used when it was not the past 2 months. With the hype of gas and oil and the reopening of the world, we decided to take this oil stock overnight, buying it at the way end of the day at $1.35, risking that $1.25 area and looking for it to gap up or get a morning push. And Monday morning we got that. We got exactly what we were looking for. We woke up to a gap up. And this wasn't an ordinary gap up. This was a 35% plus gap up. Something that you love to see, especially on Monday morning. The first time you're able to sell pre-market is at 7 a.m. And when this stock was getting to that time, it was almost up 40%, and we were as happy as can be. Right as 7 o'clock hit, it gapped up and the buyers came in. It went up even more, and we were up 50% plus on our money. We had to take the bag. Seeing that to start the week, we couldn't believe it. And in the first 10 minutes, by 7:10 a.m. Eastern time, we had $1,356 in our pot. Let's go, snipers. Since the sniper was hot, we were not gonna put it down. Monday afternoon, we found another one of our patterns. This is a first red day pattern. We found it in the big running listed NASDAQ stock, XSPA, as it was trying to create first red day after a huge 4 green day run up it just had. As it started to show weakness, we decided to short the stock at 240, holding overnight and expecting it to make that second red day in continuation. With the sniper gun still hot, we also decided to buy OTC cannabis stock, TGODF, as I was making a nice first green day and holding the 20% plus closing out the day. We liked the risk level and I was holding up at the end of the day, so we decided to buy it at 375, looking for a morning push / gap up. And Tag a Bag Tuesday started with the bag. XSPA showed signs of weakness but never could crack that $2 spot. So we decided to cover it at 205, from 240 to 205, making $525 on our money in just about 15%. Unfortunately for our OTC Cannabis first green day play, TGODF, it didn't continue. And we did what we had to. We stuck to the plan and cut our losses. We decided to sell right at the bell at 3.7, losing only 1%. And when the sniper's hot, we don't want to put it away. We found another first red day pattern on an overextended listed stock. Now when we look for first red day patterns, we're not just looking for a red day and a normal red day. We want to see these stocks run, get 100% plus run, 3 to 4 green days. And that's what we saw here in listed NASDAQ, DGLY. DGLY went from $1.40 all the way up to $7.10 in 5 days. And when it started to show weakness, finally on that 5th day, we were interested. We watched it all day as it faded down and dropped below VWAP to close out the day. So we decided to short the stock at 568, looking for it to continue weakness and make second red day just like XSPA. We also found another OTC cannabis stock that night. We found OTC cannabis stock TRTC as it was approaching multi-month highs. We liked the way that it was holding a tight range, risking that 1.4 spot to go break the 1.6 multi-month area and possibly gap up or getting morning push the next day. And on Wednesday, we got the crack we needed in DGLY, and it's true, crack killed. DGLY showed weakness at the bell and eventually cracked $5, dropping all the way down to 460 area where we decided to cover around 460, making a total of about 20% and $540 on your money. That's $1.10 on your investment, no matter how many shares you buy. Unfortunately, the OTC cannabis cool down trend continued, and TRTC couldn't break that 1.5 spot. So we had to sell it immediately at the bell as it did show a gap up at 1.4, only losing 3% and $130. With the momentum on our side and up 2,300 plus on the week, we had to keep the sniper out. So we decided to buy 2 more OTC penny stocks to close out the Wednesday. The first stock we bought was OTC penny stock KGKG. This is an OTC penny stock we've been following for a while now, and it was coming up to one of our patterns, the first green day pattern. It was up 25% plus at the end of the day, holding 0.032 VWAP and daily support. So we risked off that level, buying at 3.5, looking for it to push and continue the next day. And it actually got the push at the end of the day, closing all the way up at 3.9, giving us an 11% cushion overnight. The next stock we bought was OTC penny stock TOMC, another one we've been watching for a while. This is a penny stock that finally broke that $1 spot and was holding that to the end of the day at Power Hour, and that's why we decided to buy Toms at the way end of the day at $1.02, risking that dollar spot, so risking almost nothing, looking for it to continue and possibly get a morning push and gap up the next day. Thursday was the bloody day. This was the one that a lot of people dreaded. Unfortunately, all the gains were wiped out in KGKG to start the morning, and we were opening up with a gap down. Since it gapped down 10%, we were up about $300 going overnight, and now it's gapping down that $300. So we decided to sell right at the bell at 349 for a pretty much even scratch. The same situation happened in Toms. Unfortunately, it didn't gap up, and we gave it a little bit of time to get some morning buyers, but it never happened. So when the sellers started to come in, we got out as well, and we sold at $1.01, only losing 1 penny and not even a percent on the stock. But avoiding big losses when the plan is not going your way is key in this game. One of the hardest things to do in life is admit you're wrong, and in this game, you have to admit you're wrong and lose money. But if you're able to do that and overcome the skill and get good at cutting losses, you'll go a far way in the stock market. And Thursday, it was a good skill to have because the overall market was bloody. It had its worst day since March 4th and the big coronavirus sell-off started. So we decided to stay patient to close out Thursday. Always remember, no trade is better than a forced one. On Friday, the overall market started to bounce. After having a huge gap down day, the Dow Jones bounced off that 25,000 spot, bouncing about 500 points and closing at 25,605. To close out Friday, we decided to buy two OTC penny stocks. The first one was OTC Sub Penny, OPTI, as it was breaking multi-month highs, 3-month highs, looking for it to possibly gap up and continue the next day, and continue on Monday morning. The next stock we bought was Peso, PASO, and if you go 2 weeks back from now, we did the same thing, buying it on Friday and holding it overnight Monday for a 52-week breakout. PASO gapped up when it broke out a 52-week last time, and we're looking for that same situation Monday morning. So make sure to meet me back here next week, and we'll go over the whole game plan and what happened in those two stocks. Excited to see what's gonna happen next week with the overall market showing that downtrend this week and people getting scared of a second wave shutdown in the coronavirus. No matter what happens, the snipers will be prepared and will always have a plan. For those of you guys that don't follow us on social media yet, make sure to check us out. We post great stuff every day on Instagram, Facebook, Twitter, LinkedIn, and StockTwit. Also, for those of you out there that don't think our profit is real and think we're fake, we've been doing this for a long time now. So make sure to go check out profit.ly. That's profit.ly under the Stock Snipers, and you can see our whole journey all the way back from 2016, from the start of it all where we had $500, and now we are crossing $109,000. My favorite stat, and what proves to always work, is cutting your losses. We actually are below 50% on our win ratio, just like this week, and we were still able to profit and make that $109,000 in profit. And if you haven't subscribed to our channel yet, make sure to subscribe down below to our YouTube channel. We got great tips coming out weekly. Sniper Nick does a daily watch this video on Tuesday. Sniper Alex is always releasing daily good tips, and I'm always doing the Sunday 2-minute drill, giving you the weekly recap of what we did last week. And last but not least, if you're not part of the team, we have a great team, a great community of traders. Everybody's on the same goal of getting rich together. People starting from $200 all the way up to $100,000. Skill levels from beginner all the way to novice. Everybody on the same mission of growing their account. Join us. We got daily watch lists. We got a daily chat. We produce our buy and sell alerts, as well as a weekly webinar reviewing the whole week of trading. Check us out at www.thestocksnipers.com if you haven't yet. We'd love to have you on the team, and the price is going to be going up. We got some great stuff coming out. All right, guys, another great week in the books, another green week in the books. That marks 20 straight. We'll see you here next week for another 2-minute drill. Stock Sniper Mike, out. Forgot about him again. Thanks to our sponsor, Double Bubble.